this is truly a massive ecosystem, right? An AI ecosystem. And what's good for Nvidia in many respects is good for its customers. And, maybe some would think contrary to that, thinking that higher spend, would crimp profitability. But in many respects, listen, if you're a cloud provider, you want to buy as many of these things as possible, install them, in your, across your data centers, and then, pump up higher revenue from that. So, ultimately, it's a great thing for Microsoft. It's a great thing for Alphabet, and it's good for Amazon in terms of the potential revenue trajectory here over the next couple of years.
Angelo, what did you hear from Jensen Huang last night on the conference call that maybe was a little bit new or different?
Well, I don't know if there was anything necessarily, new, but I think the conviction level is what is, gravitating well with investors at this point in time. The fact that they did highlight the $500 billion in bookings back at their GTC DC conference back in October, really the first time they're talking about it here last night, and essentially talked about the potential upside to even that $500 billion figure. So I think the conviction that you heard from Jensen and the team is just kind of, providing some nice, upside to the future quarters.
Angelo, can I go all Sam Stovall on you? I want to go Sam Stovall on you this morning.
Ahead.
What's the star dynamic among these glory stocks of our generation? If they're 4-ish or 5-ish, what's the embedded belief at CFRA in your classic star system? What's the quality of a 5-star or 4-star technology company?
Yeah, I mean, as far as, how we kind of look at, stock picking within the tech side of things, at least at CFRA, we think the best names to be invested in are names where you're in a growing addressable market and you're actually taking content share within that addressable market. Nvidia is a company that fits that bill. Other compute names, like AMD, also fits that bill, which are both strong buy recommendations at this point in time and have been for the last couple of months. You look at a name, also Broadcom, which reports in a couple of weeks. We expect phenomenal results from them. Marvell, another name as well. So, I would say, categorizing those type of names, we think kind of fit the bill of 4 and 5s because of the addressable market expansion and content share that they're going to take there, which will allow them to outperform the broader market. So, that's kind of how we look at it.
Angelo, I know one of the narratives in this AI story that's kind of developing and getting more prominent in the last several months has been the returns. What are the returns for investors on all this AI spend? How do you kind of deal with that issue when you talk to your clients?
Yeah, the way we speak to our clients is, hey, listen, the returns aren't as great as what you're going to see in the future. And the biggest reason for that is the mix of the spending right now is not favorable for these hyperscalers. The fact being a bigger piece of the percentage of the pie here right now is going towards building those 4 walls for the data centers, right? As you move out here
Right.
2 to 3 years down the road, more and more of that spend is going to be allocated towards the actual technology itself, the actual servers, the GPUs, CPUs embedded within there. And as a result, you're going to see a higher ROI attached to the actual spending, higher margin potential as well. So, especially a company like an Oracle at this point in time, where, they're kind of trying to go hyperbolic here in the spend,
Right.
it's even more magnified for a company like that.
Angelo, I want to get one more in here. I know you got to get off to CFRA business. Gene Munster out on Twitter. When a company accelerates revenue growth despite the law of large numbers, it signals something bigger is going on. Angelo Zino, that perfectly captures the mathematics of the mass of these companies. What inning are we in this revolution if we're afraid of the law of large numbers?
Well, it's interesting because when you look at what Jensen has been saying for the last couple of months, I mean, he basically says that the total addressable market opportunity is 3 to 4 trillion by the end of the decade, right on an annual basis. We're nowhere near that. I mean, that would almost imply a 3 to 4x increase to the run rate we're at right now. I don't think anyone on the street is looking for that. But that being said, listen, I think we're probably somewhere still in the early to middle innings at this point in time. And we've got at least 2 to 3 years in terms of higher revenue for the CapEx spend. And then we'll see where we're at in terms of the demand trajectory and whether or not that can be sustained thereafter.